What do you think? Is this a ploy to talk down the currency, or were the markets not listening, or was Draghi not explicit enough?
I think he might not have been explicit enough, actually, Axel. I think in some respects he really stood pat on keeping rates on hold and obviously not embarking on the non-sterilization of the current bond purchase programme, which many were actually expecting. And as a result, we did see the euro drive to a high not seen since October 2011 in the aftermath of the meeting. I think many were expecting a little bit of proactivity, and most of his comments in the statement afterwards really led us to believe that he didn't see any development in the money markets that would lead to an unwarranted tightening of monetary conditions that would justify the use of the non-sterilization programme, or indeed of the LTRO, additional LTRO possibility that he could have used.
Yeah, go ahead. Sorry, go ahead.
But I think what has happened over the last few rate-setting meetings is that he has managed to drive the euro up, and then in the aftermath of that, we've seen a few of the policymakers make a little bit of a dovish remark or try to tell the markets that they are incorrect in an effort to drive the euro back down again.
All right, so we've come off a little bit on the back of these comments, but would you want to be short euros right now?
Not particularly, no. I think as long as you remain above the resistance level around 138.30 and even 138, I think there is still a propensity for us to drive towards 140. And from that respect, maybe we'll see some action from the ECB on that particular momentum. But they do say that they don't look at FX rates, even though to date, more recently, they have stated that a higher or a stronger euro could very well impact the export economy.
Sure. I mean, 140, you say. I mean, others throwing around, ultimately 145. Is that a level? I mean, 145, could the ECB tolerate that level, do you think?
I don't think they would. I think something will happen between now and that event. I think my all-time real target on this would be around 142.50. Clearly, we'll see some consolidation around the round number. But from a technical aspect, it does seem that there's a measured move on the cards as long as you remain above 138.
All right. Let's stay with the ECB. The asset quality review, these stress tests. I mean, I'm looking at the headlines now. Tough stance in bank health check, unprecedented scope of these tests. But I'm looking at the detail, and they're going to press banks to change the models they use to predict losses. Why is that so aggressive? Why is what they've said today on the AQR so aggressive?
I think what it is trying to do is to clean up and dispel any balance sheet doubts for some of the banks and to allow them to be in a stronger position by the end of the year when the ECB takes over the supervision. But I think what the actual changing of the model, the loan loss models, if it finds any crucial aspects missing, will create a sort of template for all banks. And of course, it will not permit any banks to sort of hide anything behind the sofa in future. So it's creating a regulation for what models that banks can use, and as a result should create a certain degree of, I suppose, belief and faith in the banking system.